Okay. Okay, we're 1 minute early anyway. Welcome, Wilfred. Thank you for agreeing to do this talk. Hello, everybody. Welcome to the Rema Synergy talk on moratorium. What is it? And should you opt in or opt out? Just to share with you, there are a few economic stimulus that has been announced by the government. But the reason why we chose to speak about the moratorium tonight is because, as you know, you need to make a decision by Wednesday, whether you are going to opt in or opt out of the moratorium. For myself as well, one of my companies, we have a bank loan. And generally, for bank loans, you do need to get the board of directors approval. So that means between Monday and Tuesday, we need to decide whether that company will be opting in or opting out of the moratorium or not. So this is a timely issue. I know going around on the Facebook, social media is about the SME situation and why the stimulus, how the stimulus is not helping out SMEs. Tonight, if we have some time, we probably also address other economic issues or any questions that any of you may have. But the reason why we're just focusing on the moratorium first is let's get clear so that by Monday, Tuesday, if we need to, we can contact our banks. I understand by 31st of March, some of the banks will be opening up their forms for you to opt in or opt out. So let's try to get that one straight first, especially for all of us that have loans. Okay, so just before we begin, before I hand over to Wilfred tonight, just to give you a bit of heads up, Hannah will be monitoring as well. So what happens is if you do have a question at any time, I suggest you post in the chat. If it's a question that hasn't been posted yet, because yesterday we opened up for questions and some of you gave us your questions. We've given that to Wilfred already for him to prepare. But if you have some more questions from his presentation tonight or thought of something, either use the chat or like what Hannah just did, raise your hands so that our host or Hannah can monitor and also inform us. All right, so we've muted all of you. Later on, if you want to speak, we might unmute your microphones. So, okay, with that, okay, just some of you might not know who I am, sorry. My name is Johan. I am a certified coach and trainer and also one of the main trainers, principal trainers for Rema Synergy. We are basically a training company and we help, our main targets are developing entrepreneurs and also their businesses. Okay, you can find out a bit more about us on Facebook. We work with other trainers as well in public speaking, leadership, and also corporate strategy. Together in Rema Synergy is Hannah. We also have Silma that is with us tonight. And I believe some of my other colleagues are also online somewhere. All right. Okay, so with that, I will kick off with Wilfred. Wilfred, so
yeah,
hi. Bank Negara announced a few weeks ago, I think a week ago, that if you have loan, there are certain conditions that it has not been in arrears, it's a ringgit denominated loan, etc. Just during this COVID, because there is no income coming in, the government understands companies and individuals are under stress. They have given us what is called a moratorium. And the government and Bank Negara have thrown in some very interesting words like accrued interest, compound interest, and then towards the end, that even I have difficulty, many of us have difficulty understanding what it is. So would you mind just explaining to us what's going on and what this moratorium is? Over to you, Wilfred. You might want to introduce yourself as well.
Yeah, thank you. So I share my screens with you. All right, so what is moratoriums? And to opt in or to opt out. And by the way, for those people who don't know me, my name is Wilfred Lim. My company is a Practical Wealth Sdn. I realized I forgot to put my company name there. All right, I'm a trainer for the financial planning programs in Sabah. the program called the Certified Financial Planner. So what these programs are all about is that it trains people like banker, unit trust agents, insurance agent, or any individual who want to become a licensed financial planner. Because in Malaysia, is you want to become a financial planner, if you want to provide advice to people, you have to be licensed by the Security Commission and also Bank Negara Malaysia. So to get this license, you require to have this certificate, what we call the Certified Financial Planner qualifications. I'm also the chairman for the Sabah chapter of Financial Planning Association Malaysia, and at the moment is one of the vice presidents of SME Sabah. And I've been in this financial planning industry for 20 years. I think by now it's 20 years. And I graduated from UKM's way back in 1993. And my major is in zoology. So in other words, I love animal, I love forests. Right. So these are my qualifications. I have my BSc, I have this CFP, IFP, RFP, all this P. And then I also have HRDF certified trainers. Okay. What is moratoriums? Is by definition, it is a temporary prohibition of an activity. Example, a legal authorization to debtor to postpone the payment. So of course, there are other words for this moratorium are like your suspensions, your postponement. Let me put this thing, and delay, and all these deferments. Is this new? It's not new actually. For example, it has been used on suspending all the permit to build new a new house, demolish a house. This is actually in US. And in Philippines, they also have moratoriums for the next 3 months. And then also we have this moratorium on evictions, where this is in California, where if you don't pay your rent for the next 2 months, the landlord cannot kick you out. So it has been applied on the other things. Right. Now, what is this Malaysian's Bank Law Moratoriums 2020? This is an initiative by the Bank Negara Malaysia, where it says that it's a temporary suspension or deferment of loan repayments, both the principal and the interest. So it's meaning that during this period, you do not need to pay any interest, or you don't need to make any payments to pay the principal. The objective is to provide relief to individuals and businesses who face temporary financial constraint due to this COVID-19. And it's applied to all licensed bank and Islamic banks under the Bank Negara Malaysia. So during this period, borrower do not need to make any repayments if they meet these certain conditions. Because there are conditions that you need to fulfill. First is your individual and SME. The individual or SME. Or if you have a conventional loan or Islamic financing from any of the bank under the Bank Negara Malaysia. And your loan is not in areas exceeding 90 days, means you have been paying your installments, but any area not more than 90 days. And your loan are fall under your mortgage, your ASB, personal education, or higher purchase. And all these are covered under this moratorium. And if you are under this category, all will be qualified automatically. It basically means that you don't need to apply for it. Bank will automatically assume that you accept this temporary deferments of payments. So the idea is that they ask you to duduk rumah, jangan pergi bank. Don't disturb the don't disturb the bank, because bank also close most of their branches. And during this period, no late payment charges or penalty will be imposed, so you can relax, don't have to make any payment. Your secret record will not be affected. So in other words, you don't make payment, but your secret say that, oh, you actually have made payment. So you will not have any bad record on your secrets. So during this moratorium period, bank will suspend all standing instructions. So it's meaning that if you have a standing instruction to pay your insurance, standing instruction to invest, so bank will suspend all these standing instructions. So if you don't want the bank to make any suspensions, please inform the bank. And for those people who have auto salary deductions by the company, you are required to inform your company to stop the salary deductions. However, this moratorium does not include non-bank credit providers such as the Ion credits, Affin credit, Tanjong credits. Who use this facility? Who get bank loan from? Who get loan from these credits? Are like, so I think in Malaysia quite common. Because let's say if you want to buy a car and the car is more than 12 years old, any car which is more than 12 years old, you cannot get higher purchase loan from the bank. So therefore, people will have to go to this credit company to get loans in order to buy a second-hand car. I don't know how common is it in Sabah, but I know in West Malaysia is pretty common. A lot of these, the car dealer, they actually engage with these credit providers, and they arrange the loan for the buyer. However, I've been informed that some of these credits provider, they accept partial repayment. They say during certain month you don't have enough money. Let's say your loan repayment is 1,000, but you can only pay, let's say 600. They accept that. Or they during this period they also offer rescheduling and also restructuring your car loans. Okay, now interest. What happens to the interest during these moratorium periods? Now, let's look at the conventional loan first. In the document released by the Bank Negara Malaysia, it stated that the interest continued to be charged on the outstanding balance. This is for the conventional loans, comprising both the principal and interest. So you know that there will be interest charged. So the next question is that, are these interests compounded or not? Over the last 2 days, few banks came out and said that money interest continue to be accrued on the outstanding principal during the moratorium period, but it will not be compounded. So these banks are the OCBC, Maybank, CIMB, RSB, Public, AmBank, Affin, and Standard Chartered Bank. They say that we will charge you interest, but this interest will not be compounded. However, other banks, we know that there are 20 over banks in Malaysia. Other banks so far have been silent. So we wait for next week, see what the developments. And some of these banks, have this statement say that the installment payment remain unchanged upon lifting of the moratorium, but the tenure will be extended. It's meaning that you will still pay the same amount, but longer periods. But some other banks say have this statement say that a higher subsequent repayment amount is required to repay the principal and interest accrued during the deferment period. For this company, the repayment period will remain the same, but you have to pay higher amounts. So now the question is, should you opt in or you opt out? Now let us compare two different scenarios. Let's say if you opt out means you continue to make the monthly repayments. Okay, the first one is assuming the interest is compounded. I use the example where the loan is 500,000. Let's say the interest is 4%. The tenure is 30 years, and the monthly repayment is 2,387. So, assuming that this person have paid for 10 months, finally, and then he continued to pay, and the interest continued to be compounded, and it took him 360 months to pay off the loan, and the total interest paid is 359,000. So, in other words, if you add all this repayment amount, means like 2,387, you multiply by 360, the total amount will be 859,348. Now, let us compare to another example. In this example, we assume that the interest is not compounded. I saw many lines on my screen. What happened?
Something you use your cursor maybe, yeah.
Did I use my cursor? Let me see. Okay, never mind.
Yeah.
Let me see. What happened? Okay, never mind. We continue.
Yeah, I think it's okay. Continue.
Okay, in the second example, is that we assume that the interest not compounded. So meaning that whatever payment you make from month 11 to 16 go into reducing the principal. So in this case, the total interest accumulated, I mean, you add this figure. You add this figure together, it will be 9,734. So, and then for this calculation, I add this figure to the bank loan at the end without any interest. So in this case, the person will take 354 months to settle the bank loan, and the total interest is 343,000. So so in this case, if the is you opt out, the difference between interest compounded and interest not compounded is 15,650. Now let us look at another example. So now let's say you opt in. Opt in means you stop the payment for 6 months. So what happens? If the interest compounded, you still take 380 months, means that you pay 20 months extra, and the total interest in 391,000. compared to if the interest not compounded, you can see here the principal remain the same, the interest also remain the same. So the total interest accumulated is 9,008, and it takes 371 months to settle the loan with the interest 369. So in this, you opt in compound. You opt in without compounding, you save about 22,000. So if I put this figure together, this is how it look like. Now the question is, should you opt in or should you opt out? Can I have some opinions?
It looks like if you opt out, your loan will be over the term of, let's say, 30 years. You will still be cheaper because here, even at the compounding, and most of the banks have said that they will not compound. Is that correct?
Yes, most of the banks said that they will not compound. I believe by next week, more banks will join in to say not compound.
So if they did not compound and you opt in, you will have to pay 369,000 versus 343,000 if you had stayed, just continue paying for the 6 months.
Yes.
So so although the government is saying that this is to help the rakyat and to help us over this thing, it seems that our loan has increased to 25,000. Is that correct?
No, this 25,000 is different between the opt-out and opt-in.
Oh, okay. Yes. So if I opt out, for example, my loan now existing as it is, I contact my bank on the 1st of April and I say I want to opt out. I will continue paying. Basically, my loan will be $25,000 cheaper. Is that correct?
You opt out compounding. I think this will be the actual figure. Let me check again.
Because opt out is seen as maintaining status quo.
Okay, this is the this is if nothing happens.
Yeah, I just contact my bank and say last month I paid you 2,000, I will continue. Is that right?
Sorry, say again.
So it would be like, for example, in January, February, March, I paid 2,300 to my bank principal and interest. So I tell my bank now, I will still continue paying this amount because I don't want the moratorium.
Okay.
Yeah. So opting out is opting out is maintaining my bank loan as is.
Yes. Yeah.
So what I'm seeing here, correct me if I'm wrong, although the government is saying that they're helping, but at the end of the loan, I will be paying $25,000 more.
If there's no compounding,
yes, 25,000
between opt-in and opt-out, yeah.
So basically,
you pay 25,000 less. Pay 25,000 less.
Okay. Yes. So basically, between Monday and Tuesday, what decision I make may cost me $25,000.
Your sounds got echo. A bit difficult to hear your voice.
Maybe you try. Can you try?
Oh, can I try what?
Okay, Okay, again, yeah.
How about Will? Okay.
Hello, Wilfred. Is this better?
Yes.
Okay, so
Yeah, better now. Better.
okay, so what I'm seeing is that if I tell my bank, I will continue paying like before, like COVID-19 didn't happen, this announcement didn't happen, I will save $25,000 over the tenure of the loan.
If there's no announcement, nothing happens.
Yeah.
We will use this figure. It
Yes.
means that there's compounding, and then we continue to make a payment.
Okay, so basically it's cheaper to continue paying.
Yes, cheaper to continue paying.
So it sounds, so the only thing here is that the government is just trying to help us reduce our outlay now, today, this year, but we will pay a penalty for taking this 6 months moratorium, and the penalty is huge. It's in the tens of thousands.
Yes.
Okay.
You're
so
correct. You're correct.
I would think it would be, if you can, then I think it would be, if you can afford to keep on paying, you should opt out.
Yes. My general advice to people is that if your income is secured, for example, like if you're the government servant, you're not likely to lose your job. And if you feel your income is very secure, you can you don't have any other commitment in the next few 2-3 years, then I would say opt out, continue to make payment, and then take advantage of the how to say it, no compounding. So instead of paying 359,000 of interest, you only need to pay 343. So you save 15,000. Does that make sense?
Yes. Are there any questions on this? Okay, Wilfred, there was a question maybe that's related to this. I'll read it out to you. Can you explain more on what is interest not compound? Does that mean that 6 months no interest? It is in the chat. Yeah, you can look at the chat from.
No, actually, it doesn't mean that. Let me see. Can you repeat your question again?
You can see in the chat, but the question is, can you explain more? What is interest not compound? Does it mean the 6 months has no interest?
Interest no compounds.
Yeah, what does interest?
No, it simply mean, okay, the Bank Negara already said that there will be interest, meaning the interest continue to be charged on the outstanding balance. But just that it's not added, the interests are not being charged in interest again. For example, let's say, I give you an example. If let's say you have, I use this one. Huh? Can you see my Excel?
No.
Oh,
we are still seeing the slides. You might have to minimize the slides. Yeah.
Let me see. New shares. Let me see. Okay, I share this one. Huh? Okay, can you see my Excel now?
Yes.
Okay. Let's say I have take a Okay, I use this compound. I try to explain this compounding. Let's say you have a investment of 100,000. I use 100,000 so that easier for you to imagine. Let's say you have 100,000, and then you this investment make a return. Let's say 10%. 10%. So percentage. So, and then so your return it will be this 100,000 you multiply by 10%, right? So you have 10,000. So assuming this is the first year, but the second year, the compounding means that your principal will be this one, you plus your 100,000, you plus your 10,000. So this will be your principal in the second year, but your return will still be the same. So in this case, your amounts that you earn, it will be 11,000. So in other words, these returns will be added into capital. So the same thing with loans. Let's say you have a loan of 100,000. This is your loan. And then let's say the interest, okay, let's say I still use the, so it's still the same thing lah. Let's say it's, okay, let's say I use a housing loan, assuming that my monthly repayment is 1,000. So now to do this calculation, what you need to do is this 100,000, you need to add the what they call it, the interest. Let's say my interest is 10%. Just an assumption.
Yeah.
I think let's say use 5% assumption. So now before I minus this 1,000, I have to do this. The 100,000, I had to add the it is clear. Let me see. Let me do this better. So the interest will be this one multiplied by this. So I have my interest of 5,000. So before I can minus this 1,000, I have to the 100,000 plus this one. So now my principal have grown to 105. So then I minus the 1,000. Sorry, I minus the 1,000. So this one minus this one, I get this one. So now going to the second year or second month, my principal now is this amount. So then I continue this process. So this is what we call it compounding. So the interest will be continued, we added into the principal. Does that make sense?
Not you are making sense, but a bit harder for us to understand. But basically, I think for the question that was asked, when there was asked that what is interest not compounded. So those, if you correct me if I'm wrong, those banks that have said that they are not compounding, which was the few banks that you mentioned, right? They are not compounding interest, are actually doing us a favor, because basically, if they are compounding your interest, your whole loan, principal plus interest, will be much, much more. Because basically, they were saying that, okay, you are owing me in April, May, June, you didn't pay me interest, so I will also charge you interest on your interest.
Yeah, they don't charge the interest on the interest.
Yeah, those that have announced that they won't compound are not charging you interest on the interest, correct?
Yeah.
Okay, so then Wong Lei Sun also asked, does that mean 6 months has no interest? I think, just correct me again if I'm wrong, that is correct. For if you opt in to the moratorium, then for the next 6 months, you don't pay principal and you don't pay interest. Correct?
Opt in.
If you opt in, that means you don't tell your bank anything. April 1st, automatically they will convert your loan or put it under moratorium. That means for the next 6 months, April, May, June, July, August, September, you don't pay anything at all to your bank. Right? You have the 0, 0, 0, right? Yes. So,
if I opt in,
if you opt in,
yeah, if you opt in means you don't pay anything.
Yes.
But interest, one is whether they're compound or no compound, there will still be interest.
Okay, so what it means here is the bank will still continue to calculate the interest, but you don't have to pay the bank. For their own internal use, they will still calculate the interest. They will still put there that this is owed to us. But for you, or the person that borrowed the money, for the next 6 months, your repayment, that means paying to the bank, is 0.
Right? Yes, for the 6 months you pay 0.
0, yes. But the bank will
there will be interest accumulated.
Yeah, the bank will, when you say interest accumulated, the bank will still calculate that this is owed to us. But they will collect back from you at the end of the term, or like some maintain the term, but they charge you higher towards the end.
Correct, something, yeah. Correct.
Okay, so we also have another question. Are the banks giving option? Okay, so let's say I want to opt in. Can I tell the bank I want to opt in, but I don't want to compound the interest, or how do you say, whether to compound or not? Is that an option as well?
Oh no, whether to compound or not to compound is not your options. It's not your choice.
That's up to the bank.
Up to the bank. The choice you have is whether you opt in or you opt out.
Okay. Okay, so first question answered. I think second question on the opt-in, can you opt in or opt out of the compounding, also answered. A question, what does interest to be accrued mean? So we have the word compound, interest compounded. What does interest accrued mean?
Interest charge lah.
Okay.
Basically, interest charge on the principal.
So accrued means they added up all the interest, that is, they will accrue it later on. All these very technical terms. Bank Negara is using terms that we hardly hear.
No, accountant will be very familiar with the term.
You are in finance, that's why you are familiar with it. But for, I think, the layman, we are first time hearing, some of us first time hearing moratorium, accrued interest, etc. You know. Okay, so so no, most of the extension is just for 6 months. That's it, right?
Yes.
Yeah.
Okay. The bank say that if, let's say, after 6 months and you have difficulty to how to say, resume the loan repayment, you can discuss with them. That's what the instruction given.
All right. Do you have other slides? Sorry, yes. Go on. So you have other slides? So
I have.
Hold on. Sorry, Hannah said there's another question.
Should I continue? Yeah.
Sorry, there's one more question. Hold on there. Where is it? Oh. Okay. So there's another question. It says that if we opt out, we pay our monthly payment without being charged interest. Okay, so opt out meaning that we don't take up the moratorium. Do we still pay our monthly payments without being charged interest?
Okay, the interest will continue to be charged. See, let's say we opt out. You opt out means you continue to pay this one, right? Assuming that there's no compounding interest. There are only two scenarios. One is compound, one is not compound. So if there's no compounding, all the payments will go into reducing our principal. So the interest, this part will be this. How I get this 1,006 is basically this amount you multiply by this monthly interest, so you get this.
Okay. So I think the answer to this one was, if we opt out, nothing has changed to our loan agreement with the bank prior to COVID-19, prior to this announcement. So depending on the type of loan you have, whether it's Islamic, conventional, etc., all of this doesn't have to be discussed, whether it's compounded, not compounded. You just continue paying as per before. If you opt out. Opt out means nothing changes from before.
Nothing changed.
Yeah.
The only thing is that you will settle the loan earlier,
according to your payment schedule,
Yeah. If it's a compounded, everything will be the same. If not compounded, you will settle your loan earlier.
That is also in the beginning when you sign your loan agreement already.
Yeah.
Yeah.
Nothing else changed except the tenor.
Okay. All right.
Okay. There's a few questions.
Oh, got some more questions.
Yeah. From Disney.
Yeah. From Disney.
I'll just read it to you.
Okay.
My understanding is by opting out will give you extra cash to make through the pandemic period, inclusive of the MCO, if the MCO will be extended. Is that correct?
No, I think it's opting in. Okay, Wilfred, I think there's a question. This has also been going around on the WhatsApps, I've heard, and gave me some concern. Some people have been saying that, okay, although if you opt in, that means you allow the bank to automatically opt into the moratorium. For the next 6 months, you don't pay anything at all, principal or interest. And the penalty, I use the word penalty, is that later on, at the end of your term, you pay, just as your example, 25,000 or 30,000 more. But some people are arguing that because you don't have to pay for these 6 months, you have an example here that the repayment is 2,387. So their argument is, you take this 2,387 and then you invest or use it somewhere else. Yes. Then you would make more money, it said, than to cover the 25,000 or 30,000 at the end.
Okay, my answer will be like this. I will only recommend you to invest, provided that your job is secure, and then means that your income is secure, and when the loan start, you have no problem is paying your loan, paying your credit card, and your living expenses. That was number one. The number two is that you have your what they call it, the emergency fund, meaning that should anything happens to you for the next 1 year, all these expenses will be covered. Let's say although your job is secure, but let's say suddenly something happens, you have an emergency fund to cover.
Okay.
And also, you have the number 3 is you have sufficient protections, meaning that if you fall sick, you have the insurance to cover for you. And then number 4 is if you know where to invest, then go ahead and because I cannot just simply give you a one okay, there are a lot of things to consider, you know, because if you don't have what I mentioned 1, 2, 3 above, if something happens, you may have to force sell your investment. And we don't know what will happen in the next 6 months or 1 year. Looking at like a lot of economy are being shut down, you know. So we don't know when the market is going to hit the bottom, and if it hit the bottom, how long it takes to recover. And it so happens, let's say your investment don't recover as fast as the index, the market index, for example. So you may have to hold your investment a bit longer. So if any of the 1, 2, 3 happens, then you may have to force sell your investment and you make a loss. You see.
Okay. You are being a financial planner. You are giving us advice, but it sounds like of all the things I put, you must have reserve fund, emergency fund, make sure that you have a stable job, etc. That it makes this 6 months of not having to pay the bank your loan and using that money for another investment like a huge risk. Because it looks like to me, a sure thing is if I opt in, my loan will go up. My total payment for my loan amount will be increased if I opt in.
Correct.
But if I take the 6 months and let's say $2,000, 12,000 or 13,000 and invest it, it's a high risk. Like you said, even talking aside from this, a lot of us are not even sure about our job security, because a lot of companies are talking about if the government doesn't help, then they might have to close down. So point taken. But again, to everybody here, participants, please do check with your financial advisor if you have one, or to your banker before you invest in other things. What we're talking about here is focusing on opting in, opting out. Yes, you definitely will have extra cash, but I think what Wilfred is also saying is that use this prudently. If the government is giving you the 6 months, make sure you're paying it to cover your expenses, covering your family, medical, etc. Okay, there's another question.
People ask a similar question, which is if they opt in, does it mean that their term is extended another 6 months?
Okay, so this is a question. They are asking if, I think you addressed it in one slide, maybe you can see it. They are asking that if you opt in, does this mean that your loan tenure has been extended by another 6 months? I believe you had a slide for that, isn't it?
Yeah, it will be extended. It depends on whether the interest compounded or not compounded. But yes, under both scenario, your loan will be extended
by 6 months.
No, it's a bit longer than that.
Oh, okay.
Longer than that. For example, like let's say
you had
let's I compare this one. This one is can you see my screen?
Yes.
Out screen.
Yeah.
Okay. This one is if nothing happens. If nothing happens, you require 360 months to settle your loan. But if let's say you opt in, if its interest is compounded, you need extra 20 months. If interest is not compounded, you need extra 11 months.
Wow, that's close to 1 year for 11 months, and one is 2 years. So if you borrowed money at 25, 55 plus another 2 years, 25 at the non-interest accumulated, 11 months, that would make you 56.
Mm.
And then your EPF also has been drawn down.
Okay, the extra 6 months is only true if during this period, during the 6 month period, there's a zero interest. So if the interest is zero, then that's correct. Extra 6 months.
But because the interest is still running, that's why it goes longer. Because they're still charging interest, that's why it goes longer than 6 months.
Correct.
Okay. Yes.
If he opts in and use a 6 month savings to pay principal after 6 months.
Okay, very interesting question, Wilfred. So the question reads, if I opt in and use the 6 month savings to pay the principal after 6 months, I suppose this is a prepayment or partial payment. Is there any difference? Will there be a difference in the calculation?
Yes, there will be difference. Okay, now let's say you opt in, means you don't pay anything, and then the amount you save, for example, like you feel that there's a return somewhere else, this is good, this is a guarantee, for example, like fixed deposit or even your ASB, will you get anything?
No, not 6 months. They do the 1 year calculation.
Yeah. Oh, okay. So let's say you got FD. Let's say FD give you, say, 5%, for example. Then you make a 6 months deposit. I think that you can add into. But whether or not it will be more than this interest accumulated, I have to do the calculations.
But if you're using the example of FD, then it would, for example, let's say every month in this question, if I opt in and use the 6 month saving, so every month he's paying 2387. Okay, so technically when he starts the FD in April, he should have 13,000, 14,000 to put in the whole 6 months for him to get the full 5, right? 2387 times 6. Then for you to actually make more money, because otherwise, how the monthly interest works would be based on your salary. When your salary came in, I pay for this month. So I pay 2387 for this month. Then I'm left with maybe 50% of my salary, which I will use on my food or other things. And then next month come in again, then I will pay my bank loan, and then 50% I use. So if you have, my question then would be, if you have the 13,000 now, it's still better just to continue paying the loan.
Actually, it's better to continue to pay loan.
Yeah.
Quick calculations. I think even though you have 2,387, you invest monthly into the fixed deposit, the return that you get will not more than the accumulated interest. Will not more than the interest charge here.
You won't get even 1642 at all.
Yeah, so it's better, still better to invest, to continue to make the payments.
Okay. So going back to your last slide, I think it's about nearly time already. Going back to your last slide just now. So you were mentioning your recommendation to us is, if I paraphrase again, if you can afford to continue paying your loan, it is better financially in the long term to opt out.
Yes.
Okay.
clarify to everybody, they have to call the
Okay. So how do you opt out? I noticed that some have, I went to CIMB and CIMB Bank just now. The main page says that only on the 31st of March will they have the ways for you to be able to opt out. Have you heard otherwise? Do you know how we can opt out if those that are interested?
Okay, my wife just asked me this afternoon. I think she received a message, SMS message from the bank. The bank asks, let's say if you want to opt out, you reply the message.
Oh, okay. Which bank? Sorry, do you
So different bank have a different way lah.
Okay, all right. Okay, all right. Okay, so is there anything else that? Okay, is there any difference Islamic finance for these conventional versus conventional?
Islamic finance will be for the Islamic finance, they also accrue on the outstanding principal, but there's no compounding. So for Islamic finance, it's the same with the what do you call it, the no compounding.
Okay, so Islamic finance use the no compounding example. Does this moratorium apply to car loans? I know credit card, no, yeah.
Okay, my next slide. For car loan, it's just an extension just a delay for 6 months. So car loan, you just take up the moratorium.
Oh, car loan is unchanged.
It's just a delay. There's no interest accumulated for car loan.
Okay. So car loan, your recommendation is just opt in.
Opt in, yes.
Okay. All right. Okay, how many more slides do you have? We're close to 9:30.
Okay, I think I quickly go through the credit card.
Okay.
Credit card.
Yes.
Let me finish the credit card. I think let me finish in 3 minutes. Okay. The credit cards, the bank allow. The bank allow you to convert your balances into a term loan up to 3 years. To me, I think this is a good option. If you have credit card balances, approach the bank. This is not automatic. You have to approach the bank and then tell them you want to convert your credit card balance into 3 years term loan. And it will reduce your monthly repayment because for each payment is less than the minimum of 5%. You see my slide now?
Yes.
You see my slide?
Yes.
And the effective interest rate in term loan is 13%. And it's lower than your credit card interest, which is 15 to 18%.
Okay.
So it's not automatic. You have to apply for it. So I do a comparison here. So let's say here you have a credit card, let's say 30,000. Let's say interest per annum is 17%. So your monthly repayment, let's say every month you pay 1,530. You settle this loan in 24 months. The interest you pay is 5,003. But if you opt in, this is not opt in. This time you convert your credit balance into a 3 years term loan. Your monthly repayment will be reduced to 1,011. So you save around 500 ringgit. And after 3 years, the interest that you pay only 6,389, only about 1,000 difference. So the difference is not that significant.
Okay.
I will say for credit card, go for the term loan.
Okay. because conventionally not so easy to, there are conditions that you have to fulfill before you can get the term loan. But in this case, they are allowing, as long as you apply and your conditions are met, then you can get a term loan. Okay.
Yeah, they say the condition is that as long as your how to say your areas or your default not more than 90 days. But for those people who couldn't pay the minimum for the last 3 months, they will do it automatic. So this time is like they will do it automatically for you. Because they know that if you cannot pay the 5%, you have no choice but to take the 3 years loan. Where the monthly is much lower.
Okay, Wilfred. So I think we're at our time limit now. Can I just have some last comments from you, maybe for us about the moratorium bank loan? Or okay, Hannah says maybe you also open up to Q&A a bit more, but maybe some last comment from you first before you do Q&A.
For me, the moratorium is that is your loan is secure, your income is secure, opt out. If you're not sure about your income, and then better opt in. Then we see what happens next, because we don't know how's the economy after 6 months. So we may need the money that we have put aside for our future expenses.
Okay.
So that will be my comment.
Thank you. Okay, so Wilfred, we stay on. We're gonna open up to questions, but one participant, some of the participants asking, could they get a copy of your slides? Of this slide?
Could I give you the slide?
Yeah. You can, if you're okay to give it, then you just give it to us. Myself, I will distribute it out.
Okay. Okay. Yeah, I can give it to you, okay, but on the condition for internal use, not to be circulated to the public.
Okay. All right. So I think you add that onto your slide as well before you give it to me. But everybody heard that, yeah. So if you participated tonight, you are getting this from Wilfred. You are free to look at it for yourself, but please do not circulate to public, yeah. I think the reason is because they are different. Everybody's loans are different. Some are conventional, some are Islamic, some are different tenures, different interest rate, and we don't want to give them the wrong calculation, wrong idea. It's always best for you to look at it and still consult with your banker. Okay, let's go for Q&As. Stay with us for a while more, Wilfred. Let's see what else questions we have. I think we can open the Q&A to, besides the moratorium, if anybody wants to ask. I noticed in your introduction, you're also Vice President of the SME Association of Sabah. So if anybody has questions, I think, on the other stimulus that has been given by the Prime Minister or CM, would that be okay?
Sure.
Okay. Maybe you want to close the slides or stop sharing your slides for now, so we can have the gallery look.
Let's see.
Also from Rema Synergy, a shout out would be, we're still keeping our WhatsApp group open. We will probably upload the slides there for you to download. And also, if you have any other topic that you think that you may want to hear and we can get a speaker, please do let us know. Okay. All right. In the meantime, okay. So questions.
One question from earlier was, is this moratorium only for conventional loan and specific on housing loan? So, but that's the question from.
Oh, okay. So one question. This moratorium, is it only for conventional loan or specific on housing loan? Okay, so I think, Wilfred, you answered this in one of your slides, right? So it's, can you just respond to that one? The moratorium is
can you see can you see my PowerPoint?
You need to share your screen again.
Let's see. Am I going to share the screen? share screen. So let me see. Yeah. Can you see the PowerPoint?
Yes.
Yeah.
So it's mortgage, ASB loan, personal loan, educational loan, and hire purchase, yeah?
Basically, for individual and SME, it covers all the loan.
Okay, thank you very much. All right, next question.
This is the last one. Do you think it's wise to use the...
Okay. So another question, different. Do you think it is wise to use the EPF money to invest in insurance? So I believe this is in relation to we are allowed to withdraw 500 ringgit from account 2 for next 12 months, I believe. Yeah.
Okay. For me, personally, I think we should not touch our EPF money. If possible, don't touch EPF money unless you're really desperate.
Because? Okay, so first thing, can you stop sharing screen so we can see the whole gallery again? And is there a reason why you say, if possible, not to touch the EPF money?
Okay, because for EPF money, because this withdrawal will be from the account 2. In future you can use this account 2 for many other purposes. For example, like to reduce your housing loan, or should your income are affected, you can use this as a standby. You can also use it for medical purpose. So many other purpose lah. So unless you have expenses that you need now, but you don't have the cash, then it's a different story. But otherwise, I say don't touch your EPF money. Although some people will say that, oh, now the stock market is low now, and then withdraw 500 a month and invest in the unit trust, and then after 6 months, when the stock market rebounds, you can make a lot of money. Again, I will say that you can do that if, like what I said earlier on, your job is secure, you have your emergency fund, you have your insurance, you have your all other expenses covered lah. Everything is okay, then you do that.
That was a good point, that the account 2, we have to consider what the account 2 can be used for. You can be set off versus your mortgage loan and other things as well. So that's some consideration for us to think about. But if I may add, I think that really we don't know what the situation will be like. So if you need to take out for the next few months, take it out. It is your savings, but you don't have to go for the whole 12 months because whatever it is, EPF still pays some interest. I think the last was what, 5% or 4%. Not many places can do as good as that. Okay, you have so it's quite secure as well. Plus the fact that if you can start off versus your home loan later on, that is quite big. But try not to touch it, like Wilfred says. Yeah. Okay.
Question from Anne.
Mm-hmm.
The accumulated interest applies to all loans except hire purchase if opt-in.
Okay, we have another question to clarify on the moratorium. The accumulated interest, does it apply to all? Accumulated interest applies to all loans except hire purchase if opt-in. Is that correct? So if I opt in for the moratorium, the accumulated interest applies to all loans except hire purchase? Yeah, I think you mentioned that hire purchase is a deferred, right? There's no accumulating, there's no compounding, there's no accruing, right?
Yeah, because they already calculated the interest from the beginning. But other loan like mortgage, ASB, personal loan, yeah, they're all based on the balance.
Okay.
Yeah, the answer to that question is yes, only the higher purchase.
Okay. Any other question? Okay, I have one question then. Totally different because like I said, I noticed you're the VP of the Vice President of the Samba SME Association, and the last few days there's been quite a lot of pushback from SMEs about there's not being enough. What would you like to comment on that as well? What is the Sabah SME Association doing, and how would what actions are you taking in that area that you can share with us?
Okay, basically, for the SME communities, we were very disappointed with the governments. The government said that we cannot retrench the people. We must continue to pay full salary. And to us, that is expenses. And yet, at the same time, we were instructed by the government to cannot open shop, had to close shop. So depends on the nature of your business. Let's say a company secretary, your accountant, you're probably not affected. But many other businesses, they have zero income. And many of them, without income, they probably won't last more than 2 months or some even 1 month. You know, after they're paying their rental, they're paying staff salary. By the second month, they probably don't have money to continue. So actually, this has been put forward to the ministry by the SME Malaysia side and a few other associations, but it was not taken up. So, so what we can do now is to make more noise, make more complaints, so that they listen to us. Because we already all this content to them.
Sorry?
There's an open letter circulating.
Oh, apparently moderator Hannah says there's actually an open letter circulating to the Prime Minister to relook or to consider some stimulus packages for SMEs. Also, yes, the SME Association Malaysia has also sent out, I think, survey forms, to go there. Yeah, definitely a bit of a challenge for SMEs.
Oh,
yeah.
Dora wants to clarify.
Oh, we have one company secretary here would like to clarify, because you mentioned company secretary. Company secretaries and accountants are also affected with zero income during the lockdown. So basically, I think the only people making some money, which I believe they earned it, is the supermarkets, hypermarkets that are still maintaining opening and still allowing us to get our food and survive. Okay, maybe one last question then, moderator. Does anybody have one last question?
No, I think everybody's good.
Okay.
Everybody said thank you.
All right.
To Wilfred also.
Okay, so moderator Hannah is saying that it seems that everybody is okay, very happy. They're saying thank you very much. So thank you very much, Wilfred, for sharing. Thank you very much for agreeing to share your slides, which we will distribute later on as well. Don't leave the WhatsApp group yet, so we'll use that to send you the slides. And also, if you have a speaker or some topic that you may want to hear, we still have 2 more weeks of the lockdown. We could do one. I got nothing better to do. I have nowhere to go. So if we can find a speaker to talk about it, why not? So do let us know. With that, okay, so.
As official, so if anybody wants to stay on to have a chit chat.
Yeah. So we're officially ending this chat. Thank you very much.
Okay.
Those that want to stay back and chat a bit more, we will be the last to leave here then. Yeah. Thank you, and see you, and be careful in MCO. Enjoy yourself. Bye.
Bye.
Okay, so thank you very much, Wilfred. So Wilfred, you said the slide. Just add on what you wanted to say. For internal circulation. Oh.
I don't know what I was going to say.
Sorry. Why is my sound?
Oh gosh, I've unmuted everybody so we can hear everyone now. So a lot of echo. All right, anybody want to ask anything? Oh, everybody's muted themselves back. Great. Has everybody seen the open letter which is addressed to PM and CM? Because this problem of the economic stimulus plan, which is not helping all our small businesses, SME, right, is a very big concern. If all of us are going to close shop and businesses all go, and entrepreneurs all go bankrupt, the economy is going to tank, even worse. Right, so it is very important for all of us. I think Wilfred said this, and I hear from everybody, we must make noise. So are you making noise? Have you signed anything? Have you joined petition? It's very, very important for us to make as much noise as possible. So videos going around on Facebook or WhatsApp is so important, I feel. Anybody want to comment? They're all unmuted, unmuted. So just talk. Oh wait, Disney has a question for Wilfred, is it? Wilfred, do you? Well, okay. I'll ask Wilfred this question from Disney. Wilfred, the financial institution like Sabah Credit and Borneo Housing, are they part of the moratorium?
Sabah Credit and Borneo Housing, I think no. But I could be wrong lah. I'm not 100% sure. But if you ask me now, I think the answer will be no. Johan, I think you're muted. I can't hear you. You're muted.
Okay, sorry. Yeah, that's a good question. Sabah Credit, Borneo Housing, but I'm not too sure. I read somewhere that because they are state government, then not necessarily coming under, but they also bank negara, under bank negara, but they will probably follow suit. So just check with them if you have loans with Sabah Credit or Borneo Housing.
Oh, sorry. Are we all good? Are we done? Okay. Okay, if we're done and saying good night, then say good night. Go back to Netflix. All right, thanks everybody. Thanks, Wilfred.
Bye.
Bye.